Bitcoin is currently going through a critical phase where market sentiment and technical structure are pulling against each other at the same time that IT has now tested the $90,000 resistance level for the 9th time. This is not random price noise, and it's not about luck. It's a zone where bulls and bears have been repeatedly clashing, with energy gradually building up. Looking back over the past few weeks, overall sentiment across the crypto market has been notably weak. The fear and greed index stayed in fear, sundry near extreme fear, for an extended period. Many investors began to hesitate, reduce exposure, and some even started asking a serious question. Will there really be a bull market in 2026? But this is where things get interesting. While the majority of market participants remain pessimistic, fear itself has begun to ease at the margins. The latest data shows the fear and greed index moving away from extreme fear and gradually returning toward a more neutral zone. Historically, this shift from fear toward neutrality has rarely marked the end of the cycle. More often, it has been the opening signal before a major move begins. Now look at capital behavior. What large corporations and institutions are doing stands in sharp contrast to retail sentiment. Companies like Strategy, long-term holders of Bitcoin, continue to quietly and consistently add BTC. This sends a clear message. Institutions have not changed their core outlook due to short-term volatility. They are positioning based on longer-term strategic cycles. As a result, we see a very typical market structure forming that on one side, retail investors feel uneasy due to volatility and headlines, that on the other, institutions are gradually accumulating during fear. This divergence, institutions buying while retail hesitates, usually suggests the market has not yet entered true greed. In other words, a full-scale bull run may not have officially started yet, but it is moving closer step by step. From a technical perspective, key levels are very clear that if Bitcoin can firmly establish support above $90,000, overall bullish momentum has room to fully release. Once that level is confirmed, market speed is likely to increase rapidly, with a short-term objective around $93,000 and potentially higher than on the risk side. The most important structural support remains between $88,000 and $86,000. This is not just a retail reference zone. It is also a level closely watched by institutions and longer-term capital, as long as price holds above this area. Current price action looks more like high-level consolidation and accumulation, not trend weakness. Overall, the longer the consolidation lasts, the stronger the eventual breakout tends to be at 8T this stage. Technicals are waiting for confirmation. Sentiment is waiting for direction, and both are aligning ahead of the next move. You can think of the market this way. It is not being indecisive. It is waiting for a signal that is clear enough. Fear is gradually fading, and strength is quietly building. If Bitcoin can truly establish itself above $90,000, this is unlikely to be just a short-term bounce. It could mark the start of a newly reactivated trend. Now I want to hear your view. Do you think BTC can firmly hold above 90K this time? Type yes or no in the comments, and we'll verify the answer together through price action. Markets always eliminate those without patience. The longer the base, the higher the move. If you want to consistently understand key levels, see how sentiment shapes price, and avoid chasing tops or selling bottoms, subscribe to this channel. We'll move through the next level together.